budgets will get tighter.
Yeah, the expectations out there, though, will look like there's relief coming. But certainly, households still have to adjust. Sorry, I'll just go down to Bernard.
Governor, you were saying that you're comfortable that inflationary expectations are anchored. They're currently about 3%. How much further above 3% would you say they're not anchored?
Oh, well, we don't have a number, and we aren't forecasting expectations, but we wouldn't want to see them getting too much higher, particularly if we've seen the headline numbers come right off and start to come down. So, sorry, can't give you a number.
And you said on July 24 that you wouldn't want to see excessive exchange rate depreciation. There has been some fall in the currency, although not so much on a TWI basis. Again, how worried are you about an excessive fall, and what would you consider an excessive fall?
Well, look, we're concerned that we shouldn't see, as we go into a reduced tightening phase, that the exchange rate moves too rapidly for reasons that aren't fundamental. We don't have numbers there. We are all the time looking at likely impacts on imported inflation out of that. But so far, yes, the exchange rate is down further from where it was with our official cash rate. Not particularly for New Zealand specific reasons is our take. It's for a bunch of international reasons. Were there to be New Zealand specific focus on this, then we might take a slightly different view.
You mentioned in the statement that the new issuance of Euridashi bonds has reduced in recent months. Do you see a risk there of an exodus of funds from the New Zealand economy as some of that money perhaps goes to Brazil or South Africa or wherever?
So do we see a risk?
A risk of an exodus of funds as some of those investors don't roll over their Euridashi and Eurikiwi bonds?
Oh, I don't think we see a particular risk of exodus of funds there, but as you say, it's sort of new maturities of it's new issues of the question, and certainly New Zealand, Kiwi, and I think Aussie as well are much less flavour of the day in those. They're down at levels that are less important for us to worry about, but we wouldn't want to see any particular subset of the market being driven by any particular force to pull money out in a significant way. We don't see signs of that.
And just
you see the New Zealand economy as being better placed to weather the global sort of economic conditions than say the US economy in particular, and yet you're forecasting a long-term fall in the New Zealand dollar or depreciation of the dollar. Is that just a medium-term phenomenon, or is that a...
Yeah, I didn't quite say what you just quoted me as saying. We think monetary policy has been well positioned to help the New Zealand economy through this period. The US, of course, has been in an interesting situation with very difficult housing sector, very difficult financial sector. But so far, the rest of the world's having the recession that everybody thought they were going to have. They're not having it yet. So
they are having a recession, aren't they?
Well, not on the numbers at the moment, they're not.
Do you have any concerns about what may come out of the Select Committee inquiry into the monetary policy framework?
We're very interested in seeing the Select Committee inquiry report. I assume it'll be coming out shortly. I guess curiosity more than concern, because clearly we're looking for things that can make monetary policy more effective both on the upturn and the downturn of the cycle.
Nevertheless, Dr. Bollard, even if the US is not actually technically in a recession at this point...
It's not, it just had 3.3% annualised Q2 growth.
Well, it's definitely suffering very, very serious economic times in terms of employment and housing, and much more serious than we are. I mean, what's our relative position in relation to those currencies in terms of long-term growth prospects?
Well, we don't take a view on that, but we will look at where the apparent drivers of the New Zealand dollar at a particular time, and an important one has always and is still been the level of commodity prices. Now, at the moment, commodity prices are coming off, but off very high levels. That means less support for a commodity exporting country's currency like the Kiwi, but it doesn't necessarily mean it goes down to very low levels. We'd expect it on the long term to continue to reflect the fundamental competitiveness of the economy, but we know in the short term all sorts of other things can happen.
So we're competitive in the long term, but in the short term it's a bit uncertain.
No, I don't think I said that either. Any other questions? Bernard.
Did the activity around the bailouts of Fannie Mae and Freddie Mac over the last week and the volatility on financial markets and credit markets have any effect on the size of the cut that you've announced today?
No, we certainly did all our work in the context of quite a bit of instability in the financial markets, and we are never insulated from that, but nothing specifically around that, no.
And just finally from me, the Australians are looking at a deposit insurance scheme. Do you think that's something New Zealand should look at?
Well, New Zealand has an open mind on deposit insurance, and this probably isn't the appropriate time to talk about it. We'll be doing our financial stability report on November the 4th. It's closer to that. Are there any other questions? Well, thank you. Can I note that we have with us today the clever team from Scots College in Wellington who are winners of our Monetary Policy Challenge. They'll be the governors of the future, and I'm sure they're available for interviews as well if any of you are interested. Thanks very much, everybody.
Yeah.